Good afternoon, traders. It's November 19th, and it's about 4 o'clock in the afternoon. My name is Daniel, and this is the view from my vantage point. I want to take a second here and show you some forecasts that could have generated some major profits in the futures market. We're talking about the U.S. dollar index, gold, and light sweet crude. Now, I want to call your attention to the chart on your screen right now. We're looking at the U.S. dollar, and for those of you that have not seen VantagePoint before, VantagePoint indicated that the U.S. dollar was going to go down back here on October 2nd, and it went down. The index lost some value, and you can see you would have profited about $1,200 per trade there. Now, right here in the middle of the screen on October 20th or so, VantagePoint indicated the U.S. dollar index was going to go up. And I know that because the blue line crossed above the black line, and the neural index, this green line right here, indicated short-term strength. You see, when it's up here in the 1 position, it's indicating some strength. If it was down here in the 0 position, like at the beginning of October, that would indicate some weakness. Now, when I had this crossover around the 20th or so, you can see that this trend was expected to go up. Now, it started going up dramatically after that forecast, and just in a couple of days, we're talking about making $2,000 per contract on the index. Now, let me show you something else. Since that forecast happened, this market has gone up substantially, and you could have profited in another $4,500 per contract in the dollar. Now, let me get that off the screen. You can see that's $6,000 per contract total between 2 trades. VantagePoint, you know, the most popular package is $4,900, so it's well worth the investment. You recoup it very quickly. Now, back to the center of the chart, October 20th, right in the middle, you see that crossover, you see the neural index at a 1. That's an early warning sign that this trend is going to start going up, but it's also an early warning sign that gold is going to start going down. We know there's an inverse relationship here. And look at this. A couple of days afterwards, the blue line crosses below. The neural index confirms it. And now in gold, it starts going down. Now, VantagePoint does global market analysis, so we know those relationships are there, and you can use this to make some substantial profits. We're talking about $10,000 per contract in gold alone using these forecasts. Now, VantagePoint also forecasts the high and low for the next trading day. So right here on the right-hand side of your screen, there's a floating candle. VantagePoint indicated the high was going to be 1078.10. And today it's gone up to about 1081. So it just broke through the high, which is good because our most profitable traders are using that predicted high to set more effective stops, which means if you got stopped out today, let's say you did that and you got stopped out somewhere around 1081, you're up $8,500 profit right there in 19 trading days in 1 trade per contract, guys. Light sweet crude, same situation. The bottom fell out, at the beginning of the month or so. VantagePoint indicated it was going to go down, and it's gone down substantially. Look at this, guys. Per contract, $5,700. We're talking about making tens of thousands of dollars we're talking about making tens of thousands of dollars by using predictive information and getting into trends before they take off. It's time for you to start doing that, and it's time for you to start changing your trading results forever.